Well, whoops, Jeff, I came in at the wrong place there. Jeff, Jeff Lutz is with me today, and I think we should start with NVIDIA. I asked this question the other day: if the market expects a huge beat above what the market is expecting, how do you know if you beat? And it looks like we found out. Jeff, as I was watching the stock move during the earnings call, I was kind of reminded of a Tesla call.
Yeah.
So talk to me. What in the world is going on? What are the people thinking?
Well, I mean, NVIDIA beat the top and bottom line. They raised their guidance. They confirmed that Blackwell is shipping in the billions of dollars of revenue in Q4 of this year, which, if you don't understand production, that means it's in production.
He said
They said
he said shipping, because that he specifically said.
Yeah, shipping, not building, shipping, like
Right.
leaving the door and making money in the billions of dollars in Q4. And he was asked about the change. And again, for the viewing audience, and I've done high-tech product integration for a number of years. I've worked with NVIDIA on products before. I'm very familiar with this process of working with silicon and silicon manufacturers. And when Jensen talks about a non-functional mask change, these are changes that are made to improve cost, to improve yield, to improve manufacturability and throughput in the factory, in the manufacturing process. There's no expectation on customers that they have to go through and redo all their certifications. Are they going to get new samples? Sure. But the point is when you do a non-functional change, the evaluation time is faster, the risks are lower versus a functional change. When you're making a functional change, you found a bug, you found a significant problem. Then you have to go through and do a lot more retesting, a lot more internal evaluation time to NVIDIA, a lot more customer evaluation time. And then the way these masks work is you can make, you can start running some, you can make a change in kind of one after another. You don't have to take everything down at once. And basically they guided to there's going to be billions of dollars of Blackwell shipments in the quarter Q4. So basically, I don't know. They're basically saying that we don't know what all this talk is. And oh, by the way, Hopper demand is growing. It's continuing to grow. It's continuing to strengthen. And finally, there was a sequential tick down, I think 1 or 2% in gross margins from 77 to 75. And yeah, and the conversation around that was, well, guess what? As we build a new product and we start ramping up Blackwell, where you have to take on some inventory of that. Also, it's lower yielding in the beginning. It's slower because it's a new product. Anytime you take a line down that's running a hot product that's been in production for a couple of years and you bring on the new one, your cost structure is going to be challenged in the beginning. But it's challenged to the tune of, their aggregate gross margins being 75%. So they're, they're not going to be missing too many meals. So long story short, Bears, you can't have it both ways. You can't be screaming about a Blackwell delay, and then when they tell you, actually, no, we're shipping billions of dollars of it, and oh, by the way, we're taking a sequential gross margin hit because we're building more of the new stuff and less of the old stuff. And oh, by the way, we have unlimited demand on the old stuff, and it's growing. It's not your typical new product transition in the industry. Typically, when you're transitioning to the new product, it's looked upon as like, okay, this is going to spur more demand. This is going to be a big deal for us. And it is. Blackwell is a big deal. There's tighter integration. There's more components that NVIDIA is owning, which means there's more money for them to actually make. And it is a big deal. But when your current deal is flying off the shelves and you can't build them fast enough, you have a very high class problem when you're going from the old product to the new product. So I'll leave it there. I think the market needs to digest this. I don't know if it was looking, exactly what it was looking for. It could be green for all we know tomorrow. It could be, could be red. Who knows what's going to happen. But in terms of, the health of the company, the 90, every 90-day check-in, the health of the company, I think they're doing well, but not investment advice, but I think they're doing great.
Yeah. So one of the things that, there's, I guess, the two big questions about NVIDIA is whether this is a long-term growth stock, whether there isn't some point at which the competition and or just the aggregate need starts to drop off. Larry on Monday said he looks at that as being maybe 2 to 3 years. But even 2 to 3 years would mean, okay, it's not a 5-year crazy growth story unless they come up with other stuff. They didn't really address that today, but they did address the other question, which is this entire business of their customers getting an ROI. I thought it was an interesting response, not maybe the one I would have liked. So he did talk more about the fact that the customer will save money immediately, as opposed to really what's going to happen in terms of the retail side of that ROI.
Yeah. Yeah, I think they're trying to anticipate and answer some of these questions around this, because if you know, some of the reporting from some of these hyperscalers has been a little bit vague. I mean, they're all talking AI, but when it comes time to break it into its individual segment and report on it and guide on it in detail, they're a little bit less on those details. I think that it brings me back to Tesla, because I think the real world, call it terminations for their AI solutions, whether it's their perception chip, the Tesla chip that's in all the 7 million cars. And then that same silicon obviously will go to AI5, will be inside of all the humanoid robots, the Optimus robots, and it's going to be in the data centers doing, assisting in the training process. Tesla has a real world application for these, and I feel really good about it. And it's a very easy story to tell. When Jensen was asked about self-driving in the last quarter, he said, Tesla is the unequivocal leader in this. So this is coming from a company that's servicing 80 OEMs trying to bring up self-driving vehicles, and they point to the one that's actually buying a lot of their training stuff, but not buying their perception, and saying that they're the leaders. So I think this really paints Tesla actually in a good light. Obviously, there wasn't that discussion on this call. The other couple of things that stood out, Randy, were the sovereign AI piece of it. This is, governments wanting to have their own instantiations, their own entities. Just think about how supply chains are moving now. They're being more localized. They're less global supply chains. That same trend is going to happen with data center and then AI. And they're seeing that business ramp up sequentially, like several $billion. It's growing. Like, so you have sovereign AI ramping up. So yeah, it was a very, very interesting conversation. You didn't get there's no scare on that call of like, there's any concern about demand, there's any concern about customers. There wasn't that. It was just, we gotta get to the new product as quick as we can. And oh, by the way, we've got to continue to fulfill everything on Hopper. And then finally, they talked about their software revenues. I think they're going to exit the year at like a 2 billion run rate just on software revenues alone. So I mean, this company has so many different avenues to make money and a very high margin.
Yeah, so then I looked, just for fun, at the other members of the Magnificent Seven, in the after hours, and pretty much they were all down a little bit after being mostly down today. Of course, the stock market, all the indices were down today pretty heavily. And the last time I checked, the after hours the pre-market on the Dow was up a little tiny bit, but the NASDAQ was down big time. Some people think that this Nvidia call today was going to have a pretty big impact on the market. In fact, Dan Ives said he thought this was pre the Nvidia announcement of their numbers at all, like 3 minutes before, and certainly before the earnings call. But he said, I think this will be the beginning of the next bull market. So with all that in mind, what do you think about the impact of Nvidia on the market overall?
Well, I think there's some critical support levels for the Qs that's Nvidia's inside. There's some critical things to look at. So it'll be interesting. I know Jensen's giving an interview right now on Bloomberg. I don't think the market is necessarily 100% dependent. There's, Salesforce and CrowdStrike had, good earnings, kind of mixed conference calls. But Yeah, I mean, it's a big component and it'll have an impact on all the others. There's no, if anything, it'd be Nvidia. It's the biggest company of those, of that component, depending on the day and the stock price, of the Magnificent Seven. So it's going to have an outsized impact. But yeah, I think their future is bright. I think they're outgrowing, while the stock price has grown, their earnings have grown pretty much faster,
Sure.
when you look at it. And I think they're sub 30 forward, on earnings per share, and it's better than where they were 2 years ago. And so they're they're just expanding at a rapid pace. So we'll see. I don't know if it's the start of an next bull market or not. I think September, you know it's interesting, their earnings week. I think the prior week and this week are very, very low liquidity weeks in the market, just due to everybody, a lot of vacations,
End of the
a
year.
lot of people transitioning before Labor Day, kids in school, vacation. So it's usually a fairly illiquid market. So we'll see what the volumes look like, from today and tomorrow. So it's just interesting that, the biggest company in the market, they're reporting in such an illiquid week. So I can't tell you. I think this week is going to be confusing. Maybe next week will set a proper tone after the holiday.
Yeah, and of course, we have the PCE on Friday, and then next week we got the labor numbers. So we've
Yeah,
got
GDP tomorrow, I think.
GDP
Yeah.
tomorrow. Yeah. So let's take a look at Tesla then in terms of all this. We're barely over 200 at this point again. We're only 30 trading days away from 1010. Do we need some good news on FSD to build that FOMO going into 1010, or is it just really a matter of time? Or do you think we will have FOMO going into 1010?
Well, I think there are two different markets. Everybody was just trying to compare the last month or so going into 8.8 versus the last month going into 10.10. And like we said, September is a highly volatile month. It's one of the worst months, I think, in the stock market seasonally. I don't know why. I'm not a big fan of these seasonal things, but
Right.
I mean, you have to pay attention to it. You at least have to understand it.
Yeah.
And it's typically not a good month. So, that could be working against it. But I've seen Tesla do well in September. So I don't know if I'm a huge proponent of that. Between now and 10.10, you're going to have the delivery numbers. You're going to have, you may have some updates in terms of FSD. It's interesting. I think the 12.5 series was the target for the 8.8 and was the target for them. I'm sure Tesla's got different software internally, obviously, that they were going to demonstrate some of the robotaxi capabilities and things that they would turn on in 12.5 or something later that we don't have access to. But now they've got a couple more months to let it cook. So it'll be interesting to see what they have ready for October. But yeah, there's a couple of data points between now and then. I think it'll be interesting. And of course, you have the Fed rate cut, or at least the Fed meeting in September 18th. So
No, the 12th.
Sure
September
about that?
12th.
Okay.
Yep.
Okay.
Yeah, September 12th. You have the CPI on the 11th. That's the first day of the Fed meeting, and then the 12th is the Fed meeting.
Gotcha. Okay. Yeah, I thought it was the 17th.
Yeah.
Okay, gotcha.
All right. So if we have so your comment just a minute ago was one that I talked about earlier today with who did I talk to about this? I don't remember now. I think it was Brian Wong. Do you think that Tesla ran out of bandwidth on actually updating the 12 series because of I think they probably had way more difficulty than they thought on doing the truck and on doing the hardware 3? Do you think they were spending a lot of the
you're talking about engineering bandwidth, not
engineering,
chip bandwidth. Yeah.
No, engineering bandwidth. Yeah.
Well, yeah, I mean, the complexity is certainly growing when you add in Cybertruck. It's got different control mechanisms for steering, four-wheel steering, and so forth. And it's a different product, and it kind of lets, I guess, potential partners also know that you really want to get in front of and start working with Tesla as soon as possible if you think you're taking a license. But yeah, of course, the complexity has grown as they've, as the model has evolved and what can work on hardware 3, what can work on hardware 4. Yeah, I would say that the release complexity has increased. I'm not surprised, but I think a lot of folks in the Tesla community should have the expectation is that when a lead release comes out, and then there's all the other products that need to get it,
Mhm.
it's going to take Tesla probably a month, and maybe they're going to work on it and they're going to get faster at this over time,
Mhm.
as things converge. But there's a fair amount of complexity that they want. These are 2 and 3 ton machines that are moving throughout the world. This isn't your smartphone.
Yeah.
It is the end of the world if one of these things it could be the end of the world for somebody if something malfunctions. So I like Tesla's approach. I know people aren't happy about it, but when Elon says 2 weeks from something or 10 days, what he is doing, I'm telling you what he's doing because I've worked with other executives like this. I've worked for CEOs like this. He is putting a a target out for his team, and it's not always realistic, but he's trying to, the team works hard. They don't need to be pushed, but they're being pushed by the CEO. And I think sometimes people just take some of these things so literally. And then I see people counting, well, it's day 13. You said it was going to happen on day 12. Where is it? I'm like, give them a break. This is not baking a cake. This is something that's brand new, that's never been done before in the world. Again, I'm not saying that Tesla can be, just months and months and months off, but there's just going to be some variation.
Right, right. On another subject related to Tesla, they had asked Canada for a set aside on that 100% auto tariff. Apparently, they knew about it in advance. I didn't know about it until it was announced, but they knew about it in advance. They said, "Listen, can't you just give us the same as the European Union did with regard to the tariff instead of the full 100%?" I don't know that they've even formally said the 100% is in place yet, but they also apparently have not said anything yet with regard to Tesla getting or not getting that different rate. Since Tesla asked for the different rate and was perfectly okay with the European Union rate, do you think that if they got that rate, they would continue to bring them in from China rather than from US manufacturing?
This is something that's always a balancing act when you're doing global allocation of factories. You're looking at the container rates, you're looking at your marginal costs and utilization structure in each of your factories. And there's not one answer for an infinite period of time. It's going to change, it's going to be dynamic. There's also certain model configurations, there's certain sourcing rules that are set up for certain factories for them to bring in certain battery types. So this is a disruption for Tesla. They have shipped out of Fremont, and that was the core, or that was the primary approach. I imagine that the total COGS coming out of China has gotten so good relative to Fremont that even that plus the shipping, direct port to port via ship versus the shipping, they have to either put these on rail to Canada or probably there's some trucking. I'm assuming that it teetered well over to the China side where they can even take a tariff hit and still prefer that source of supply. The other thing is, again, it's all about utilizations. They're trying to keep China full. They want that factory full. So yeah, it's a balancing act. There's not one answer. I would be surprised if Canada gave Tesla the European Union deal. And the reason is Tesla has manufacturing assets, significant assets in the European Union, and there would be a reason to give them a break because they have a source of supply in the European Union and they are leveraging it. They just need to leverage China's to supplement that. So there is a reason to do it. Tesla's invested in the EU. Now Tesla's clearly invested in Canada as well, but not in terms of manufacturing.
Yeah, yeah,
And that's where all the big quantity of jobs are. So if I'm Canada, I'm saying no. I have a NAFTA deal. To get it out of the U.S.
So that just reminded me of something that I've been talking about on X for days and trying to, I believe, straighten people out. And that has to do with tariffs and the impact on retail that tariffs actually have. Now, of course, if it's an OEM item, it's not retail, but actually the impact on the first customer, whether that's a OEM customer, whether that is a wholesale customer, an importer, whether that's retail. in my opinion, a tariff can have an impact on that first sale, but generally speaking, not very much, because if I could have sold it for more before, I would have. So if I'm selling to somebody for $1 and now I get a 10% tariff increase, and I say to the guy, it's $1.10 now, he's going to say, no, I've got another option. I've got another way to go, because otherwise I would have been selling it to him for $1.10 last time.
Yeah.
That's my experience, 55 years in importing and exporting, but importing in particular, is that no, I know what I can get for the product at retail or wholesale or even to OEMs or to the government. I've got a worked out price. But if my tariff goes up, if my container cost goes up, if my differential in my cost of money, my, what do you call it, the differential
Exchange rate, foreign exchange,
foreign exchange rate. I mean, there's so many things that can change, even the cost of the raw material, I mean, the raw product out of the country I'm importing from. All those things can go up or go down, and they're going to impact I may attempt to pass it along, but I can't always pass it along. And if I can't pass along, what do? I go back to my chain and I tell my manufacturer in China or wherever they are, I can't get that price. You're going to have to you're going to have to move, or we're going to lose all the business. I go to the broker and I say to the broker, I got to have some.
But that's what tariffs do. Tariffs force local sourcing, and they force companies to try to figure out how to get, it really forces the local sourcing option, basically, is what it does.
Yeah.
And, and usually that's why you have 100% tariff too. It's not like, we're not talking about a 10% tariff. We're talking about 100% tariff. So this is very punitive. And there's no figuring this one out. You have to change your sourcing rules in order to comply. And it really shows you the threat. Remember, Ford, GM, they have significant manufacturing, Stellantis in Canada. And it really shows you how threatened the North America supply chain is to China.
Sure.
And, this is a real problem. China has a structural advantage, and some of it's created through government funding. Some of it is just very smart long-term planning by private and the, companies and the government, like on minerals, like on mineral refining, like on the assembly supply chain for cells and packs, and building out that battery supply chain. Look, Tesla got the U.S. serious about battery manufacturing. They had to do a JV with Panasonic, and they got that going in their own factory in 2016, I believe, and nobody else was doing this. Nobody. They're like looking at Tesla like, we really think this is going to be a big deal. And so this is 2016. 5 years before that, China's already been, ramping this stuff up. So they have yes, their government is funding some of this effort, but by the way, so is the U.S. government. The U.S. government funds and credits battery manufacturing. The U.S. government funds U.S. assembly of vehicles and gives credits to consumers. So there's help coming from both, but China has a structural advantage because they started earlier, and they have much, much lower labor rates.
Oh yeah.
And so this is the situation they're in.
Yeah, so maybe we can also speak to that just for a minute too, because my experience with China and with actually most foreign countries, especially the dirty manufacturing countries, is that it's not just about the labor rate. It's also the property cost, the cost of the factory. It is the profit that the owner needs to make is not the same as the profit the owner needs to make in the US. It's the cost of the executive staff is way lower than the cost of the executive staff.
Yeah.
The cost of regulation is less. I mean, you just go up and down the line.
Yeah.
We found in retail, our products ended up on, say, the shelf at Target, and some of yours obviously did too. That one of the biggest cost advantages of China was not even the product, it was the packaging and the interpack, master pack, and the UPC code labeling, and everything was cheaper.
All that stuff is thought through.
Even if the product was the same price, the packaging really threw the advantage to China.
Yeah. Yeah. It's so many different cost lines where there's an advantage. And that's why when you hear, forcing, $15 an hour,
Yeah.
um, when you hear some of these things, you're going to increase the cost of goods, and you're going to create problems that you wouldn't have had if you just created an economy that built manufacturing jobs where not every job had to be 15, but there was a step or there was a ladder to get you to 15, to get you to 18, to get you to 30.
Yeah.
And that's ultimately what you want. You don't want to just force this, because now you're in a situation where you can't really do a lot of this um, manufacturing the way we're established right now. But it's going to be interesting to see how this plays out. I can see China responding. In kind. There's always been a VAT tax of is it was at 17. By the way, for a long period of time, U.S. had like a 2.5% tariff on China made vehicles, but China did not have a significant auto industry when they had that low tariff rate, which is literally only 2017. You have to go back to get to that tariff rate. So they've really developed their auto industry, and they're now the number one net exporter of automobiles. They passed Japan.
Yeah.
So they created a structural advantage. It's an advantage that's many years in the making, and it's going to be difficult for the U.S. to catch up. But for Tesla is in a good position because of how they design their product, how they localize and design their supply chains. And, I would put Tesla head to head with any China manufacturer in China.
Yes.
And remember, they do business in China pretty uniquely in a unique manner versus other companies. They don't have the joint venture. They're not rev sharing. They don't have to share all that IP, that know-how. But the big thing is a lot of companies try to like come in, crash landing, and get their product built in China, and they're still sourcing from all over the world. And Tesla's 97% locally sourced around Shanghai.
Yeah.
They've created this perimeter, and it is a massive implication on costs.
Yeah, and I think the United States had it right back when they entered China. You're probably aware of it, the dirty work theory, or the dirty job theory, that Japan was where all the dirty work went. When I say dirty work, the people that go home with grease under their nails, manufacturing and printing and things of that nature. Japan had all that work in the 50s. Then it went to Taiwan, and the Japanese got too wealthy to do that kind of work. Then it went to Taiwan. Taiwan got too wealthy for people to do that kind of work in Taiwan, so it went to South Korea. Same old thing. The United States is looking around, the manufacturers looking around, where are we going to go next? But right now, I don't see the United States having that kind of forward thinking again, where China is. They're developing South America and Africa as the next place for dirty work. Tesla seems to be looking towards India as the next place to do the dirty work, but we may be missing it again in terms of not having the foresight at the leadership level to think about where the United States is going to get that work done.
Yeah, it's a serious issue. The CHIPS Act is a good first step, but it's not well thought through, because the network effects of that supply chain of bringing the silicon back to the U.S., which U.S. invented a lot of this technology and used to do. I used to go buy it, and I'm not that old. I was buying a ton of parts out of fabs in the U.S., New York, Austin, all different locales. And the U.S. lost that. A lot of that, went overseas, and now they're trying to bring it back with the CHIPS Act. But the problem is you create a network effect problem, because you're not you're not terminating that silicon into an end consumer product in the region that you source the silicon from. So now you're putting the silicon on planes and trains and ships, and you're creating all that logistics costs and packaging and so forth. And you're adding all that costs, and you're extending the size of the network. And some of the biggest costs that you'll incur are not actually the cost of logistics, but the cost of excess and obsolescence, of ordering the wrong stuff at the wrong time as customer demand changes. So I worry that, we're not focused on the full end-to-end supply chain. We think we're getting through with this CHIPS Act, and there's a national security element with that. but you're going to increase costs, and you don't have to increase costs because the assembly stuff is not as difficult as the silicon fab manufacturing, and it's not easy, but you need the equivalent of the CHIPS Act. You need it on final assembly of product that you can sell here. Think smartphones, think computers,
Right.
Think that. And right now we're literally lighting money on fire, and we're throwing it to these automakers for EV transition when they don't have the right product. They don't know what to build and how to build something profitably, but there's over $20 billion of loans and grants going out to them in the last 2.5 years.
Yeah. So speaking of that, are there any rumors or rumors of rumors with regard to Juniper or CyberCab? Anything you're hearing that we're
So
not?
I think Tesla is going to really continue to proliferate this cyber brand. There's a reason the Cybertruck went out without Tesla branding on it. I think Tesla's going to build this brand. I think CyberCab is real. And I think they're going to extend and grow that brand. I think they know they have something both on the industrial design and uniqueness of it, but also the uniqueness of like what you can do at scale in manufacturing. If you can simplify the process and not paint product, not have to buy billion-dollar paint booths in all your factories and all the yield associated with that. So I haven't heard any new rumors, but I think they're going to refresh the Model Y, and it wouldn't surprise me that what Tesla's been working on with materials innovation, like they wouldn't be trying to shrink the 3 and the Y. Maybe this is part of the new vehicles for the first half of next year. If you can get some of the size out and some of the weight out, but you can do some innovation to keep the interior spacious, that's what consumers want. Because if you take the weight down, then you can take the battery pack down, and you can really start peeling costs out of these products. So I was just talking today on a space, and someone was asking, why didn't Tesla do the 25K vehicle sooner? And the answer is we had a pandemic, and we had an inflation scare, a 40-year high inflation scare, and there was no way you're building a product or even making design decisions during that period until you understand where all these input commodities are going to land and you can project it. So could the 25K vehicle been 6 months or 9 months planned sooner? Maybe. But to say that like this thing should have been shipping 2 years ago, there would have been more compromises, because you would have been spending, for example, $110 a kilowatt hour for batteries versus 60.
60. Yeah.
And then in that differential, you're making trade-offs in other areas of the car. Versus now, Tesla, when Tesla makes a 25K vehicle, I think there's going to be trade-offs, but there's going to be, far few compromises. Tesla's 25K vehicle is going to be better than probably most 30, 40, 50K vehicles from the other manufacturers, in my opinion.
AJ thinks we're going to double the current price target, the current price this time next year, and that's without Robotaxi or Optimus. Since he makes his claim that way, it would seem like the street would be able to do that same calculus that he's doing, although he's putting something in there for FSD being level 5 and the uptake being a lot more, and other countries starting to allow FSD. But does his model make sense to you? Do you think we could be at double these numbers on the stock by next year without Robotaxi or Optimus?
Well, the stock price, can double with anything or cut in half. So could Tesla's business results materially improve? Well, I mean, they're guiding for 2.7 million units of production, not including the 25K vehicle. This is on the existing capital they talked about. So that's a meaningful jump from where we're at today. And I think a lot of the analysts only have, just around 2 million units, somewhere between 2 and 2.1. And Tesla is saying they're going to be materially higher. So Tesla says they know something that others aren't counting on. So that's why you're going to see this differential in the marketplace until that's clear. I think when Tesla unveils the lower cost vehicles, I think analysts are going to have something to put in their spreadsheets and update their numbers.
I can't remember whether you and I discussed this last week, but it's been really percolating around X, and that is the whole idea of a supervised ride-hailing service, a supervised robotaxi, prior to going unsupervised. It seems like there's just huge numbers of advantages. I listed 7 the other day. What do you think? Do you think we should do a supervised first?
Yeah, I've been a proponent of this. I think that's what they are going to do. I think Tesla doesn't have experience taking high volume, uh, amounts of transactions and taking people's money for rides. And they have to build out that piece of the network. So why wait? Why wait to debug that? Why wait to grow your network and the number of customers on your Rolodex? Why wait to grow that while you're trying to get to a fully driverless solution? Why wait? Start building out the network now. Get your fan base now. Get people the experience. They're going to be somebody in the driver's seat, but the car is going to be driving itself and gathering all that data. And people, I don't know about you, but if I call a car and I know it's going to be a Tesla versus any other car, I feel better about it. I know that the car is safer,
Right.
and I feel better about being in the inside of that car versus any other car. So I do think they're going to start with this. It helps solve a lot of understand and solve and debug a lot of things that are related to hosting a robotaxi network before you're driverless.
On to the economy very quickly. The market is very stretched, according to more pundits than just me. Do we need another 10% correction before we start going into the future?
Sure. I mean, there's usually a couple of 5 to 7 or 5 to 7 to 10%, corrections in a year. So I think we've only had one or maybe
Right.
one and a half, something like that. So, could we have another one? Sure. Um, but let's see what the jobs number looks like. Let's see what the GDP numbers look like. But it looks like the markets are a little bit less risk on. But as I say this, what are we at? S&P 50, near 5,600.
Right.
It's not like, we're very close to all-time highs. And we're near all-time highs in the Dow, and S&P is just a smidge below 5,600. So it's not like we're sitting here, at 5,000 wondering where the market's going to go.
Yeah, that's kind of how I'm seeing it. Okay, I'm sure that you would like to jump off before I go through
Yeah.
these numbers. So thanks again. That was really great. Really love going through all that stuff with you with regard to import, export, and whatnot. Very useful. And until next Wednesday.
Yeah. Thanks, Randy. Have a good one.
Thank you. All right, bye for now.
Bye.
Okay, so what we have here today, you probably already know some of this, but some of you just wait until I go through it in case I have some commentary or not. Anyway, the Dow was down 159. NASDAQ was down 198, almost 200. S&P was down 33, and Tesla was down $3.46. That in percentage wise is 0.39% down for the Dow, 1.12 for NASDAQ, S&P down 0.6, and Tesla down 1.65. In the after hours, we have got Tesla down another 1.53. So that's where we are right now. In dollars, that would be, just for fun, that is $3.15. We're sitting at 202.60. The Magnificent Seven was all down today, and most of those that I looked at a minute ago were down in the after hours. Oh, let's check Nvidia just for fun. Where are they now? They are now, whoops, I just hit the wrong thing. They are now down 880 in the after hours, after being down 269 in the regular market. Okay, let's go ahead and jump into the, we'll have those in a few seconds. I might even pause things so that I come back to it for you. I'll come back to the bonds in a minute. We'll see where we are there. Let's go ahead and go to oil. We have got oil sitting basically unchanged in the pre-market, but all the way back down to 74.47 for Texas Intermediate and 78.65 for Brent, and natural gas dropping even more back down to 193. So that's all very, very good in terms of inflation. That's for sure. Gold is up barely in the pre-market at up $2.90 at 2,540. So a good few percentage or so off of its all-time high. Silver has backed down under 30 again to 29.15, and copper is still sitting in about the same area there, $4.14, down 0.17. We've got the dollar down against the yen and up against the euro, down 0.17 against the yen and up 0.018 against the euro. Crypto getting blasted again, down almost 3,000, 2,957 for the day at 59,090. The futures for the equities, the NASDAQ is continuing the path. Obviously, Nvidia leading the way on that. So that is down 217 or 1.12%. S&P down 37 or 0.66%. The Dow is actually slightly up 14 or 0.03%. So, and then what we want to do is okay, and looking at those bonds, we've got the 10-year down 0.8 of a basis point at 3.833. We've got the 2-year down 0.2 of a basis points at 3.865. And so the difference, 3.2 basis points. When will it whoops, we've just got a change on that. We are now down to 2.9 basis points. Maybe if we watch it long enough, we'll get to see it invert on my watch. But anyway, there you go. That's the situation as we talk about it tonight. Earlier today, had a great time with Scott Walter. If you didn't have a chance to listen to that, we talked about SpaceX. We talked about not Neuralink. We talked about Starlink. We talked about Tesla, Optimus robots. We talked about figure robots and all kinds of other things. I'll put the card right up here so you can check that out. And then tomorrow, regular day, should have Cern in the middle of the day, and we should have Bradford Ferguson tomorrow night. And of course, just check out in the morning and it'll just be me as we do after the bell. All right, that's all I got for you right now, unless you'd like to donate to Patreon. I mean, that'd be okay too. It's been great talking to you.